time for our weekly Vital Sign segment. This week, instead of examining an entire sector, we're going to focus mostly on one stock, Cisco Systems. If you hold Cisco in your portfolio, you know that the stock is down more than 50% from its all-time high. And if you bought the stock over the past year, chances are you're losing money right now. But even as Cisco's chief executive makes cautious comments about his company's growth, many investors and market watchers continue to see Cisco as a market bellwether. Let's see what our next guests think about Cisco today. We're joined in Boston by Kristen Armacost of SG Cowen, and in New York, Tom Lauria of ING Barings. Good to have you both with us.
Thanks, Maria. Great to be here.
Thank you.
Kristen, let me begin with you. What do you think about Cisco right now?
We continue to rate Cisco a strong buy. We'd be a buyer of the stock at these levels. We did hear some more cautious comments coming out of John Chambers today concerning the economic environment, but we continue to remain bullish on the company's competitive position and believe over the next couple quarters some of the economic slowdown will start to, concerns will start to go away, and Cisco will be even better positioned coming out of this economic recovery than they are going into it.
Tom, the stock is down about 50% in 6 months. Does Wall Street have it wrong?
I think for the most part, Maria, that Cisco is a fundamentally sound company and that the company will grow its revenues in fiscal 2001 by probably $9 to $10 billion. So fundamentally, I think the company is executing very well. I think, though, for the most part, the concerns that John Chambers had made in Arizona earlier this week were definitely cautionary, and I think it's a bit unclear right now as to how severe the issues that he's seeing really are. So I think that for the most part, the company will do very well, but I think that the economy is clearly expected to impact their business, and that they expect a bit more of a wider range of analyst estimates to result after the earnings call in February.
What about the theory that as you get bigger, it's harder to keep up the very, very strong growth rates that you have been? In other words, Kristen, Cisco continues to gain as far as competitiveness, as far as market capitalization, value. And doesn't the bar need to constantly be raised if it keeps growing like this? How will it continue to achieve these high expectations?
Well, I think Cisco can continue to grow. In fact, they've accelerated their growth every single quarter up and until obviously the January quarter, where John Chambers turned a little bit more cautious. But the company has more opportunities to invest today, both in the U.S. and international, where international business is still 50% of the company's revenue. Also optical and wireless. Cisco is a 5% market share in the optical space and virtually nil today in the wireless. Those are two enormously large segments, probably combined about $100 billion market opportunities, which are growing opportunities for the company. So we think that there's actually more opportunities for Cisco to grow today than existed a couple years ago.
Okay, but Tom, I mean, what if the economy does fall off a cliff?
I think if the economy slows, Cisco will still be able to do relatively well in the enterprise portion of the business. It's done an amazing job of growing the enterprise revenues. I think the concern of growing enterprise business, essentially data networking sales in enterprises such as all the Fortune 500 companies, really has been an amazing job that they've done, and they are penetrating international markets a bit more. So I think that concern has been a concern for years for Cisco on the enterprise side, but certainly a slowing economy will impact the growth rate. I do agree with Kristen completely that Cisco has a tremendous amount of room to grow its optical networking revenues and as well its wireless revenues, because the base of business has been very small. I think in 2000 we estimated that the company did probably less than $1 billion in optical business, and for 01 we're expecting $2.4 billion, a conservative estimate. Cisco is still expecting somewhere between $3 and $7 billion.
Cisco, of course, has been using its currency to make a lot of acquisitions over the last couple of years. Now that the stock has come down, do you think it will be as acquisitive with that currency?
I think for the most part, yes, it will continue. The latest comments made by Chambers earlier this week did indicate that in 2001 they still expect to make over 20 acquisitions. I think in 2000 they made about 23. So they're clearly expecting to continue that rate. And there'll be both existing companies, more established companies, which the company thinks would be accretive to earnings, and as well smaller companies, which they can ramp revenues very quickly, which may be somewhat dilutive. But I think for the most part, we'll see a continuation of the Cisco strategy during a period of economic downturn, and as well, I think they'll relatively do very well given their high valuation relative to a number of other companies that are out there.
Kristen, you agree with that?
Yes, I do. You have to look at it on a relative basis. Everybody's stock price have seen a tremendous decline, and on a relative basis, Cisco has some of the best buying power out there. Also, some of the privately held companies that had, billion-dollar market cap dreams of going public this year may have second thoughts in doing so, and there's probably no better company out there to be aligned with than Cisco in periods of economic turmoil. You also have to realize the fact that Cisco has about $20 billion in cash and equivalents in resources as well, so they don't just have to use their stock, they can also use their cash.
Okay, well, looks like a buy to you guys, huh? Okay, good to have you both with us.
Thank you.
Thanks.
Kristen Armacost of SG Cowan in New York, Tom Lauria of ING Barings. Thanks so much to the both of you for being here this afternoon on Vital Signs. We'll take